Good morning, good afternoon, good evening, one and all. Welcome to the post IP week Smoking Barrel. I'm Rustin Edwards, based in Geneva, with my illustrious co-host back from his world travels, Mr. Matt Stanley in Dubai.
Hello, mate. Yeah, I know. Embarrassingly, we didn't see each other last week.
Yeah, quite. I think we crossed paths, but never did the paths meet.
No, probably because I had my head down trying to, navigate all the rain that was there. My God, was the weather miserable.
I
I
think
read,
this is one of the wettest IP weeks I've seen in years.
yeah, I,
I
I
mean, you
read,
always get the one day of kind of bad weather, but this year it was every day.
yeah, and it was necessarily cold, which is I say I can deal with the cold. Yeah, I can deal with the cold, but it was just the rain, and the problem is because of the sort of conviviality, if you like, of Shepherd's Market. Everyone's sort of just turfs outside of the pubs, and then all the pubs kind of merge into one, and then all the guys are all the security are like stand off the road, and all that kind of crap. None of that happened this year, so it felt a lot. I wouldn't say a lot quieter because some of the parties that I went to were mental. Like OB on the Monday night was great, but there was so many people there, which isn't a bad thing. It's a very successful company, but we had a record attendance at ours, which was fabulous. Anyone who came along, thank you for coming. We had some really good feedback. I appreciate it. I actually hosted it this year, so I had to be sensible, which you know me isn't a word that I'm that associated with. Being sensible. I can get away with it now. I'm nearly 47, so you can all piss off. No, nicely, but it was a good week. But I was pleased to be at the lounge at Heathrow Airport, and I hide myself in a special corner around the side because I knew that there would be a lot of people on their way back from London to Dubai who I saw on the flight but avoided at the lounge. So, first world issues aside, I'm a miserable sod, but I don't care.
Well, I can say that, I would say that in general, I thought that the mood was, I would say a bit more optimistic this year than it was last year. I think everybody looks at the market with all the volatility that we've been having as something that is positive. However, a lot of people out saying that the market's untradeable with the volatility, it's untradeable. But for most comments that I heard, I would say the majority of people are short-term bullish, long-term bearish.
Yeah, I agree. I think that that's sort of fair assessment. Let me just share so I can show you where flat price is right now. There we are. Right, so we're 67.74. I mean, middle of the range, where we were. What was it this time 2 weeks ago, which would have been about the 4th of February? We were at 67.89. Now we're at 67.74. That kind of sums it up. And I kind of, it's my first commentary that I wrote was this morning, um, since coming back from my P week. My main takeaway was exactly the same as yours. I'm going to quote myself now. Um, Everyone has an opinion. Everyone just seems short of conviction. Like everyone is waiting for permission of some sort. It's what is going to turn that tide. I think there's always ambiguity in all markets. That's where opportunity lies, where people can take advantage. But we've got two main overarching issues in the market right now, which is why we're flirting between 65 and 70. Gasol's a little weaker, but
Well,
largely the
yeah, I
same.
mean, I
That,
think I think the market's going to have a hard time doing anything until the naval armada in the Middle East that's been placed there by the United States either dissipates or does something kinetic with Iran.
yeah, exactly.
And that's kind of whatever it's waiting for Godot. Once you have that chance of a military action that could impact oil flows, nobody can take that data and overlap it with the projected overhang of crude that's building as we're starting to go into refinery turnaround season.
Yeah.
And so you've got the two competing big overhang. However, we could lose a lot of supply.
Right, and this is it. That's the issue. I mean, I still like our June set Brent trade. I still think that's got legs. That's trading at $1.16. I think we said a couple of weeks ago when it was trading at like 94 cents on the Monday, but about 2 weeks ago, it was around these levels. I still think that's a decent buy. Um, it's this like you said. what is going to happen? There was a headline yesterday which irritated me on a random, sorry, with all respect to them, a business a business news company here, whatever you want to freaking call them, called Arabian Business, and they flashed up a headline saying Strait of Hormuz is closed. And I went, Jesus, okay. There was a temporary halt to traffic going through the Straits of Hormuz yesterday while the Iranian naval guard carried out some drills. So they just sent some warnings to the maritime fleet, to the merchant fleet, mind out, this is what we're doing. But to read, this is the problem. People are going to get carried away in certain stories saying Straits of Hormuz are closed. Trust me, if that headline came through Bloomberg, Straits of Hormuz are closed, where does crude go? Crude goes, I mean, I don't know
Oh,
where it goes.
well, it goes up. I mean,
Yeah.
I kind of put the risk of if the Straits of Hormuz traffic is ever impeded any way whatsoever, crude goes to $90 in a heartbeat.
Yeah, I would say that's right. Let me actually pull up one of the articles that Homian wrote. Um, I mean, so just sticking with that thing, what the main takeaways from last week as well, like I said, not I wouldn't say it's hesitation, it's just lack of conviction. I think people are making that was some good, yeah, that was someone burning their engine, gasoline demand's doing well. I'm just wanted to bring up what
Well,
is the
yeah, lack of conviction. Yeah, because again, everybody's a bit gun shy. Last year, a lot of traders seem to have a fairly brutal year last year trying to trade the market. And, with the Trump tweet dominating anything that you do analytically, it really put the kibosh on a lot of trade flow action. And now here we are, since January 1st, we've had nothing but Trump all day, all along, with the
yeah.
actions in Venezuela, then the actions, here in the Middle East. It's almost going to be is the March trade going to be a buy or a sell? And I think everybody's leaning on the buy, but it's hard to be in a buy because what if Trump comes out tomorrow or even today saying, I had a great talk with the Iranian foreign minister. We're lifting sanctions tomorrow.
Right. I mean, this is the thing is that I think people cannot trade on what his next move may be. I mean, Greenland's gone very quiet. Venezuela, largely seems priced in. We're going to touch on that in a minute. But what's happening with the Iranian thing, I think, is the sort of overriding issue right now. So this is something that my colleague Homian wrote a month ago. You can see this, yeah?
Yep.
9 million barrels a day at risk. This article still holds the same value it did a month ago. Not much has changed. I know that they're getting around the table in Geneva. There were some stories come out yesterday about we've made progress, but there was
Well, we,
always
they
that
have we have the chats in Geneva, but I think there were two different sides of those discussions. You had the Iranian foreign minister saying that there's progress, but more work to be done, and we'll schedule a meeting in the future. And then you had J.D. Vance, the vice president of the United States, saying, "Well, there was, we had some ideas that were batted back and forth, but the red lines that we put down were not addressed."
right, exactly. I think you sent that to me earlier on this morning that
Yeah.
that largely seemed to be the main takeaway. I mean, we've got a room here where we spoke about it internally. Prospects of a breakthrough appear very uncertain from a US standpoint, but the Iranian foreign minister said um, there has been good developments compared to the last round. Okay,
But that can also just be, how shall I say, a bit of manipulation into the press.
of course,
Because if Iran comes out and sounds conciliatory and that, oh, we're here to do diplomacy, we're here to work, here to work, here to work, and then Trump launches a military strike against Iran, they can easily say, oh, see, Trump's just a warmonger. We want peace. We were doing nothing, and now he's attacked our innocent little country.
right.
I can
Yeah, I
see how
mean,
that can play out in the press. I mean, but here you have it now where, okay, the United States has finally made it because there had been about 18 hours of no comment from the United States as the Iranians made a lot of comments.
yeah,
And now the U.S. is now starting to formulate their response, and it sounds like, okay, they may have had some points of concession, but nothing has been decided, nothing's been come together. We'll hear in 2 weeks. what happens. Now, from a U.S. military standpoint, the next aircraft carrier gets on station probably Sunday, Monday. So that happens. And then you
Yeah.
also had a dispatch of an attack fighter group from the UK to the Middle East that left the UK yesterday.
Yeah. Yeah, no, I agree. Things are getting more tense. They're not sort of calming down. But it's just on back on Homian's article here. Um, just go down to the bottom. So there's certain ways that the Straits of Hormuz can be circumvented. Saudi Abqaiq, you've got the East-West pipeline. Abqaiq here into
Is that Jebel Ali or is that into
is that Barrell?
Jebel
Yanbu.
Jammu? Okay.
Yanbu on the Red Sea. So that capacity stands at around 7 million barrels a day. So that can all of that. I mean, that's a huge pipeline. And then you've got the AgCop tanks that go from the Murban field here into the Gulf of Oman and Fujairah on this course. So that's about 1.5 million barrels a day. So the knock-on effect would be this: the Kuwait and Iraq volume have no place else to go. That
Well,
simply has to go via the Straits of Hormuz.
so is that just that must be all the Basra production then from what I because you do have the BTC pipeline, you do have the Kirkuk Seyhan pipeline.
Yes, yes, you do. So that the Iraqi stuff that can go, some of that can go north, but I think politics means that only a certain amount is allowed to go through. So that can go through and come out of Ceyhan in Turkey. Yes, absolutely. But look, so 3.3 million barrels a day of southern Iraq volume
Okay.
and 1.5 million
Basra
barrels a
export
day
because I
yeah,
don't think the Basra fields are connected to go north. I think it's only the fields in the north go out the Seyhan pipeline.
right. So that's 9% of global oil demand. This is still a threat. This is still this. None of this. Nothing has moved on. In fact, like you said, positioning of fleets, naval fleets, are in place now, and talks are going on. But if talks don't get to a point where the US are happy, Eurasia, for example, the think tank have a 65% chance that the US will there will be some kind of military action on Iran from the US by the end of April.
Okay.
Has that been baked into the cake? Is Brent worth 67.75 on the back of that news? Like you said, is it worth another $23 a barrel to take us to 90?
So there is the case to be made. Okay, we lose 9 million barrels of exports out of the Middle East, right? However, the one thing that I think would put a damper on a massive price rally if there was something there is the fact that one of your largest oil consumers, China, has built a huge stockpile of reserves,
Hmm.
and they continue to do so today. So if China is not there to load out whatever they're taking from the Middle East in volume, because they can just suck down their strategic reserve at some point,
Mosquito.
which when you think of price action, so Hormuz closes, prices spike, or not even Hormuz closes. A missile flies from a U.S. Strike group into Iran,
Yeah.
prices will spike. China says, okay, I've got all this cheap oil sitting in my strategic reserve now. Let's run that. Plus, I still have all this Russian crude that's coming in that's unaffected. So does that crude that gets impacts other refineries that have to go buy spot barrels in the marketplace, which is overhang.
Yeah. No, look, I agree. And China's a really interesting one because Clyde, our good friend Clyde at Reuters wrote something this morning, said Asia gobbles up crude oil, but geopolitics is shifting the supply mix. And he quoted obviously Kepler figures. We've got February is going to see an all-time high of seaborne imports from China, 12.2 million barrels a day. If we go back to where January 2025 was, 8.7 million barrels a day, that is a lot of oil that China are importing. Why? Is it a low flat price environment? Are they hedging? Have they got new refineries that are coming online? I'm sure Clyde, read his article, goes on to talk about it. 12.2 million barrels a day. But it seems to be, if we look at where this oil is coming from, And let me just do this over the last 1 year. So 2 million barrels a day is still coming from Russia. 1.1 coming from Iran, Saudi 1.5. Where does that refer to, say, here? So they've doubled the amount of oil that's coming from Russia, 2
which
million barrels.
makes perfect sense. If India's backing it out, it's got to go somewhere. And
Iran, largely steady. If we look at
Saudi
Iran,
Arabia largely steady.
well, no, Iran was really low here. 269,000 barrels a day in December compared to 1.154 in. Let's have a look at, I think Saudi have picked up some market share. No, that's largely steady.
Yep,
Maybe a bit in Feb. Russia is increasing. Iraq, pretty steady. Brazil,
pretty steady.
not much from the US. Canada a bit. That'll be TMX volume.
Yep.
Um, but yeah, I mean, actually, let's have a look, see if they've increased uh, volumes from the States. Okay, clearly not. This is predictive. So that'll be someone who's just got East for orders now pick up on our algorithm that is going to China. But no barrels, it looks like, are going direct from the US into China right now. They were here, but not anymore. So yeah, look, I mean, the China story. Actually, let's go. While we're on this, let's just go to India. India imports of crude and condensate. So what have we got here? Russia. Okay, that's a fairly significant drop off. So let's go February.
I mean, you're looking at March, April. Is that predictive or is that
Yeah,
reality?
all of these are predictive going forward. Feb's not closed out yet,
Yeah,
but we're two-thirds
that
of the way
looks
through the month.
that looks pretty steady, despite all the talks of no Russian oil.
Well, what were this? 1.47 million barrels a day in February last year. February this year, 1.3 million barrels.
Pretty steady.
Who's missed out then? Iraq, steady. Saudi, less. UAE, steady. US. I mean, arguably Feb as well is looking like a record, another record month for India and China. Yeah, look, if you go back, this was the next month, March 2025, 5.2 million barrels. This is 5.384. I bet this is a record high, 5 years. Yes. So India and China are looking at importing record volumes of oil in February. Um, that was maybe one of the other takeaways last week was that demand is holding up is holding up pretty well. I mean, I think Vitol kicked the can down the road around when they see peak oil demand. It's no longer 2030. 2030 is only three and three quarter years away, which is not a long amount of time in the oil world. Peak oil demand, that was a thing apparently 5 years ago. Are people still talking about that?
No, it's I think nobody's talking about renewables as much as they were 5 years ago.
God, Greta would be, I bet she's fuming talking about this, but it does seem to be that I mean, I know we've mentioned this a lot and I jest around it, but oil seems to be a thing again. It wasn't for a long time. I mean, it was always a thing, but it wasn't something that would sort of, resonate through the hallways of a conversation if you're at a bank. But now I'd
Well,
argue that it's a good investment.
but the green fuel story, it's still an underlying current. You still have people pushing it forward, but you still can't get around the physics and the cost.
Right.
It takes a lot of energy to create green fuel. If you want to go e-fuels, it takes a lot of energy. So, how do you make green fuel? Oh, we'll call this blue hydrogen instead of green hydrogen, and then that gives you this credit. So it just becomes a political balancing game. And if you can't make a business model survive outside of a subsidy, it's not a business. And I think that's been the big fall down of a lot of the green projects and a lot of the bio projects that are being touted over the last 3 years is that without the subsidy, it's not a sustainable business. And so with that, you lose investments and you lose ideas. And so it's like with the IMO kicking the can down with the carbon tax.
Yeah,
Like it,
you
however
sent
you
me
want to do it. And
Yeah,
so now that whole framework seems to be on the verge of just being reworked fully because nobody wants to pay a carbon tax and nobody wants to spend 3 times more for the same BTU that they can buy today at $500 a ton.
yeah. I mean, this is the thing, isn't it? Is you sent me a diagram yesterday of EU carbon permits in euros that you said if a picture could tell 1,000 words. Is that on a similar vein to what you're talking about?
Well, it was basically the collapse in the EUA price had to do with comments from the German chancellor saying that this whole emissions pricing scheme doesn't work. We need to do something that's more relatable, that doesn't destroy business. Because as you start looking at how the EUAs were supposed to phase out the free allotment of EUAs to legacy businesses, and in turn they'd have to now go cover their emissions exposure in the market, it starts driving up the price of carbon. But what it does, it makes businesses unsustainable because they can't afford, they don't have the sales price of the goods that they produce to cover the increasing cost of the emissions. And so
Right.
unless you start putting tariffs on every country, like 100%, 200% tariffs on lower cost production regions that are importing in, and they've tried to do this with their cross-border carbon tax as well, saying, oh, if you're producing something in a unregulated environment, we're going to tax you as if, or we're going to force you to pay emissions as if you produced it in Europe to
Yeah.
try to balance out the price. But you just create a market that becomes unsustainable and unoperable. I mean, if you look at the manufacturing indexes for all the EU and for Germany and France and Italy, they're doing very poorly. And it can be pointed to the fact that there's an overburden of regulation on industrial and the manufacturing sector within the EU.
There you go. I mean, yeah, it's yeah. I mean, we haven't got time to pick at all that, but I totally agree. And it. I didn't read one article that came out of IP Week, IE Week last week that was about maybe China. Maybe China, the story still is that we see gasoline and diesel demand dropping off in China because of the rise of the electric vehicle and because of the subsidies around LNG. That's not a new story, though. That is
No,
something that we wrote nearly 2 years ago, where we saw, the decline in general. But actually, we've got oil demand increasing on oil products more than last year. We've got 1 million barrels a day growth compared to we had 800,000 barrels a day last year, mainly driven by the fact that people want more stuff. People want more stuff that's made out of plastic, which means that
well, I
petrochemical
mean,
demand goes up.
yeah, the petrochemical demand is where all the demand sits because I think transportation fuels continue to, lose out as more efficiency keeps falling into the whole
Right.
internal combustion engine index.
Yeah. Yeah, and I think yeah, look, the oil market is amazingly resilient. And I'll tell you who else have done a very good job, just moving on from that slightly. I think OPEC, you know, the one thing that's really amazed me in the last, I don't know how long, let's say the last year, is how resilient OPEC have been to reacting to market headlines. They've just let the market do its thing. When it's been a correction down to 60, OPEC haven't said much. There was an article yesterday that came out that OPEC may bring back more oil. That's certainly in our balances that we think from Q2, OPEC will continue to unwind the cuts. They paused in Q1. That will come back in Q2. And there's still issues in Kazakhstan. But I have to say that I think OPEC has surprised a lot of people in the market in a good way.
Well, I think the change that OPEC has made, it was probably for the better, is rather than having two decision points in the year. Because if you remember, prior to the Russian war invasion, you had the two OPEC meetings where they would dictate what are they going to do with production. And now that we have this monthly meeting where they dictate next month's production,
Yeah,
it gets rid of a lot of that volatility that happens because instead of saying, oh God, they're going to meet on June, what are they going to, because look what's happened in the last 6 months since the last time they met. They might do this, they might do that. And so you started creating a lot more headline reactive. And still, I mean, if somebody from OPEC says, yeah, we're going to, looking like we're going to do a cut, and markets will go up still.
yeah.
But I think the fact that they have a monthly meeting now where they do discuss this and they do come out with an announcement every month, it makes it where the market can plan a bit more and you can actually see the trend of what they're trying to accomplish and I'm going to say not forecast, but at least have a much better feel of how OPEC's going to respond.
Right. This
And
is
it,
from my
and it
colleague.
allows for more perceived discipline from OPEC because it's a monthly meeting now. It's not a biannual meeting.
Yeah. Yeah, and there's a lot less focus around it. I mean, I remember when OPEC Day was a big thing, when I first started in the industry, and people would dial in and on the OPEC website and the market would react. But I mean, now I agree. It's I wouldn't say that it's less drama around it. It's just less focus on it. This is from Amina, my colleague. Um, OPEC production declined 530,000 barrels a day in January to 42.1. Here is what production looks like. So Saudi production, was largely in line. I think the group have done very well. These are the main nine OPEC countries, and you've obviously got the others who are not part of any quota system. Venezuela at 700, Iran's still at 3 million barrels a day, and then you've got the others, OPEC plus. Russia, still not producing as much. Kazakhstan, obviously a big issue right now. But the market largely, 500,000 barrels lower than they're allowed to produce, allowed, you know what I mean? And what they say, against quotas, etc., etc. But you wonder how much more that will carry on. And I think that is largely where structure is pricing itself, is what OPEC output looks like. Because the curve, like I said, I keep on banging on about it. The Brent curve is still heavily backwardated, and it's that roll down trade. 60 cents a barrel,
Yeah,
April,
but
May's
that
trading like.
I would still say that that's a reflection of the geopolitical risk. I mean, if you're going to go long something and try to hold on to it and not squeeze out your VAR too much, you can lever up on the spreads.
Yeah,
And I think the backwardation remain again as long as you have a carrier strike group and the sabers being rattled very hard by Washington, structure is going to remain backward. So I do agree you have a roll-up trade as long as that position sits.
yeah.
And even with the refinery turnaround season that's going to be kicking off here now up until the middle of March, end of March, where this is where the majority of the crude builds are supposed to happen, we won't see, I don't think we'll see contango in the curve,
You don't
even
think
if
so?
stocks build, because there are still people who are going to be, traders will be so focused on something's going to happen in Iran, I can't let the market go lower, or the market can't go lower because something's going to happen in Iran.
Yeah. Well, I think the maintenance season, what's happening in Dangote, apparently the RFCC is back. Rely on that as you wish. Dos Bocas is doing really well in Mexico. That's at a record high. But just quick before we go, fuel oil. I saw we published something last week. Low sulfur straight run cracks turned negative for the first time since 2019. A very weak, very low sulfur fuel market has pushed low sulfur straight run cracks lower. A gradual recovery is likely after late March as Northwest Europe refinery maintenance tightens supply and downstream demand improves. But fuel markets looking weaker than they have done for a while.
Well, so fuel oil markets have been structurally weak, and I think that's going to change the script here as Venezuela comes back into the focus. High sulfur fuel for Venezuela. Venezuela was a major producer of high sulfur fuel because a lot of their crude oil is heavy sour, and that high sulfur fuel was exported to the east, also to the U.S. Gulf Coast. Now that Venezuela has become tradable again, that high sulfur fuel is coming back into the marketplace. So that's going to put some downward pressure on the whole high sulfur fuel complex and start widening out your high sulfur, low sulfur fuel differentials.
Right.
Now, as Venezuelan crude gets pushed back into the U.S. refining base, it is going to change their feedstock diet. Currently, U.S. Gulf Coast refiners have been buying high sulfur straight run primarily out of Iraq. Prior to the war in Ukraine, they were buying it from Russia because they need to balance out the unit the crude units depending on what crude slates they're running. And as they were running primarily light crudes from the United States, they needed a heavy barrel to come into the bottom side to balance out the system.
Right.
Now that if Venezuela comes back into the United States mix as a feedstock directly into crude, it changes their balances where they become high sulfur constrained. And so, what I think we'll see happen after turnaround season is you'll see the U.S. diet for feedstocks flip from high sulfur related feedstocks to low sulfur related feedstocks. And so
Okay.
we could see a change where low sulfur VGOs, low sulfur straight runs move from the zero point 0.5 VLSFO blend pool into the refinery feedstock sector at close to 300,000 barrels a day, which then tightens up your VLSFO market. And so we could see those high five spreads go from, 40, $50 in ARA all the way back out to maybe 60, $70 as those molecules get repurposed back into the higher value feedstock pool.
So you're a buyer second half point 0.5 cracks.
I would be a buyer of zero point 0.5 fuel versus high sulfur.
There you go. Heard it here first, people. Edwards 101. It's just made you some money. June set Brent.
Maybe.
June set Brent. Blame me.
High five, blame me.
The high five. Blame Edwards. All right, mate. Well, look, good to see you. We'll be back. I'm not traveling for a while now until early March, so we can continue the chat. Anyone I did see last week, it was good to see you. Like I said, thanks for coming. Ramadan Kareem to many. No
Ramadan Kareem to everybody. Happy Chinese New Year, Year of the Horse,
Year of the Horse.
Year of
What
the
else have
Fire
we?
Horse.
Yeah. What else have we got? I'm sure there's loads of other shit going on, but there's
Uh,
yeah,
yeah.
we're a quiet time of year here in the Middle East for Ramadan. So yeah, I'm lucky me. My kids will be home early from school. All right, mate.
All right,
Nice
everybody. Well,
one.
hey, thank you very much for tuning in. Click like, comment, and subscribe, and we'll look for you on the flip side.
Ciao.